Okay, so trading tip of the week, and this is sort of really just on options. I think I've probably mentioned these before, but I want to go back to them just because of the volatility in the markets. So, with options, when you've got this high volatility, it's so easy to get stopped out in the markets. Obviously it depends how wide your stop losses are. And just remember, what I call the three V's: volume versus volatility. Volatility increases, reduce your volume down. Have a wider stop, but without increasing the potential loss. Just got to make sure it's sensible enough that you'll get the profit. But pretty much in these markets at the moment, whatever you ask for, you've got a chance of getting it because they're crazy. Now, when it comes to options, because of that sort of the volatility in the market, as the buyer of the option, it provides you a guaranteed stop if you're wrong. And of course, you don't need to get out on a day because they're going to go through to expiry unless you get out of them before. Now, with a emphasis on buying the option, that because you pay that premium, and that's what protects you and gives you that guaranteed stop loss, basically. Now, with calls, you go long of the market, but if you buy puts, emphasis on buying puts, then you actually got the chance to go short of the market at, sort of at a selected strike price, so at a selected price in the market, and within that time frame before expiry. And then you've got straddles and strangles, which are strategies that offer you the ability to be long and short of the market, which again are great. And last few years, I mean, I've been trading options since the 70s, but as well as futures and everything else. But they are a great opportunity if you've got that longer term view of where the market's going, and you don't need to sort of micromanage the risk because you already know the most that you can lose in those trades. The important thing is that you need to be right before or at expiry to profit from them. And that again, that is important. And when I've got options positions on and I'm in the money, so that I'm seeing a profit from from the strike price, so the price that I've got in, plus my premium, so I'm past my break-even point. Then I find them great because I use the futures to hedge myself, and I trade around the futures to increase that profitability in the option, regardless of when at expiry, whether I'm right or wrong. Of course, most options traders just buy and sell the options; they don't use the futures as much. But again, if you want to find out anything like that, we do courses on this, one-day workshops, and I can certainly help you and demonstrate and show you how to do that. So if you do, contact details are on the last slide. Okay, so now we're going to move on to technical analysis. It was a choppy week for sure. Just a reminder, in the right-hand axis, black numbers are support resistance levels that I've identified generally off of a trend line. And the brown numbers are breakout levels. There might be a support level, but if it goes through it, then, it's more likely to go down further. Again, don't shoot the messenger. I'm just trying to give you my interpretation on the markets. Claret numbers, that's where I can identify sort of a horizontal level where I see that there's buyers or sellers rejecting those levels, and they're based on double or triple tops or bottoms. The pivot point colours down there below, so just be aware, there is a brown in there, so sometimes the pivot, make sure you're looking at it and seeing that as a pivot line or it's a breakout level. Don't get confused on those. So when we look at the Dow, it's pretty much unchanged on the week after some big moves. And of course, so I'll put some lines in for you. So I've got resistance at 34496. I've also put in back in the 34020, which was the old April-May high, just because that might come back into play again now. Support-wise, I've got 33784. I've also got 32988, and 31731. You know, the fact that there's not too much data out this week, you know, yeah, I'm not saying we're not going to see any movement, but maybe we'll see less than last week. On the 30-minute, I've got resistance at 34,217, 33,953, and support at 33,851. Daily S&P, I've put back in that resistance from April, May again. You know, it's still higher on this one. I mean, whether they'll pop through it, that hasn't happened with the others so far. Well, this one's sure, and NASDAQ, of course. So resistance at 43.02. I would like to see the market get there actually, just for a strategy that I use, but we'll have to wait and see. That doesn't mean I expect the market to go up, by the way. That's just, you know, for me, that's where I'm going to look to probably buy some put options. And then 42.07 as resistance. Then support I've got at 4,006 and 38.67. Now, just remember, when I'm talking about sort of what I might do, that's not a recommendation. That's just me thinking out loud, you know, because, again, you know, I've waited and waited after those April, May highs for it to rally. And in the summer, in August, they popped up there, which gave me a great trading opportunity. And then, of course, the markets fell away from there. But, you know, now they're back up here. Can they sustain these levels? It's really going to decide on investor sentiment. Now on the 30-minute, from the close, you know, basically it closed at 41.46. So, you know, I've got that triangle in there. So I expect it's going to break one of them pretty much when it opens Sunday evening for the futures. But on top of that, I've got resistance at 41.90 and support at 40.63. Moving on to the NASDAQ, so as you can see, that sort of old April, May high, and of course it popped through there in August, but it's just not got anywhere near it this time round, even with the rallies. And after a strong week, especially after the Fed tech data, you know, it has popped up and it stayed up better. And of course, that's probably, you know, you've got to take into account the tech performance for the stocks as well, and it's still sort of a little bit stronger. Anyway, so I've got resistance at 13,555 for the April, May high. Below that, I've got 12,877. I've got support at 12,160. Moving on to the 30-minute, I've got resistance at 12,802. I've got support at 12,550, 12,502, and if it should sell off and go down to 12,395, I've got that as a breakout level. Moving on to the Russell. So the Russell was another one that did actually break through those April, May highs and actually went up to almost test the August high. So I've got resistance at 2017. I've got support at 1881 and support at 1837. On the Russell 30-minute, I've got resistance at 2014, so pretty much the same as the daily. I've got support at 1987 and 1964, but the 1964, as you notice, it's in brown, is a breakout level as well. So currencies, so yeah, so the dollar really sort of struggled pretty much all week until Friday. You know, when the European central banks made their rate decisions on Thursday, that did sort of bring it back a little bit, and then Friday it sort of really cemented that. So when you look at it, I mean, cable lost over 3 cents on the week. So I've got resistance at 124.52 and support at 120.81. On the 30-minute, I've got resistance at 124.10, 122.73. I've got a support level, which is a breakout level at 120.55, and below that 118.67. So, there is quite a lot of volatility in the currencies at the moment, especially based around the dollar. So if you're doing those pairs trades. Moving on to the euro against the dollar. The euro finally managed to break that 110 level, but momentarily it couldn't hold on to it. And then, of course, it retreated aggressively on Friday. So for the euro, I've got resistance at 110.82 on the daily. I've got support at 108.17, 107.54, and 105.30. On the 30-minute, I've got resistance at 110.30 and 109.63, with support at 108.15 and 107.57. Remember, you can always just take a picture on your phone just to hold on to these charts, or screenshot them just as reminders as we go into next week. Looking at Bitcoin, again, it sort of followed everything else. It had that nice move up. When everything else was a bit erratic, it was just consolidating around the sort of 1700 levels. But then, it hasn't managed to push up higher along with everything else, all the other asset classes. I've still got that 27,355 as a breakout level, should it have a massive spike, but it's got to go some way to get there. Other resistance is 24,475, with support at 23,315 and 22,595. The 30-minute, I've got resistance at 23,743, with support at 2,331 and 23,075. Again, they sort of pretty much followed the stocks and everything else a bit lower, then a bit higher, all over the place, but still tracking. That correlation is still there. Yes, it's a loose correlation, but it is actually still doing it. And remember, I've changed this over to a 30-minute chart now. So when you're looking at this, you're seeing how they're mapping each other over each 30 minutes. So yeah, it's a loose correlation, but it's still sort of holding in there, as you can see from the shape of the charts. Okay, so moving on to gold. Wow, what a ride gold had last week. Even just sort of from Wednesday to Friday, it almost touched 1960 on Thursday, and then fell as low as 1861 on Friday. That's almost $100 drop. And look at the size of those candles, those last two red candles. So I've got resistance at 1954. I've got support at 1871, but it's closed below that. So obviously be really careful about that. And remember, these are all futures prices. I'm a futures trader. These aren't the same price as you'll get for CFDs. And 1841 is another support level. On gold, on the 30-minute, I've got resistance at 1939, 1930, 1928, and 1887, with support at 1849. Last but definitely not least, we move on to oil. So WTI, I've got resistance at 82.62 with support at 70.03. Obviously wide, but it struggled to really sort of keep up in those 80s, and now it's sort of just coming off with concerns over the economy. And the fact, of course, that rates might still carry on going a bit high. And of course, just remember that dollar relationship with commodities, because most commodities are priced in dollars. And of course, as that dollar started to strengthen, certainly on Friday, that again is going to start to drive the commodities down with that inverse relationship. But just remember, you know, fundamentals drive commodities. Just the fact that the dollar's going up or down, it may increase the pace or slow the pace of the commodity because it's priced in dollars. It's not going to actually change the sentiment. On WTI 30-minute, then I've got resistance at 79.46. You know, it's going to be, I've got 73.50 in there where the market could go either way from that. It's sort of pretty much a start point for that. So we'll have to wait and see how the market opens to how that one's going to go. And then I've got support at 73.07. But you know, the market had that big sell-off on Friday, as you can see, and it will be interesting to see if that can continue. And of course, you know, if it comes down low enough, then we should expect the US to start to build their strategic reserves back up. Not sure, you know, what level they're going to do that at, because obviously that's their decision and not mine. So I hope it works out well for you. Just want to remind you of what we provide to help you. So of course we do this just to help you prepare for the week ahead. And then we've got the daily newsletter that we send to your inbox every day, which includes, you know, headlines, includes the global news, my views, which are updated every day. And of course, you get fresh chart levels and pivot points. So, you know, why not subscribe if you haven't already, of course. And then we do workshops just to help you fill in the gaps. They're just one day. Otherwise, you know, if you need more than that, then we do 1 week courses to really help you to sort of progress or at least understand trading for sure in the markets. And then if you want that deep understanding because you want to turn trading into a career, we do our masterclass. So that's an accredited course. It's 4 weeks of guided learning, but you can split them up. You don't have to take them all at once. I'm halfway through doing that one at the moment. Okay, now trader mentoring. So, you know, you may already be trading, but you want to get to that next level. I can certainly help you with that. We consult, we help companies with their hedging, you know, against sort of FX or against raw material prices, because obviously they're volatile. And then we also provide trader education, of course, and that's to individuals, to exchanges, you know, even to the staff of exchanges sometimes. And we also provide it for brokers and their customers. And then if you feel that you haven't got enough capital to go into trading or you don't want to risk your capital, then it's possible for you to get a funded trading account through our partner just by qualifying with their trading challenge. And if you want to contact us, here's our details, info@symaxfintech.com. And if you want something you want to ask me about trading, then you feel free to reach out, chris.tubby@symax-int.com. Have an amazing week and be lucky.